Hey guys, welcome back to my channel. Today we're going to talk about the top 5 mistakes I see beginners making in the stock market. These are very common mistakes and are also personal mistakes I made myself when I first started. As some of you might know, I started investing in the stock market on the 28th of March 2020, and it's been kind of a roller coaster ride for me. I've had my ups, I've had my downs. Overall, I'll say this roller coaster is trending upwards. Initially, I started small and super careful. I put one foot in front of the other and took my time with it. But as time went on, I fell to greed and fear. These are the two strongest emotions that control the stock market. I ended up losing about $20,000 in one single week, my 7th week in the market. And I lost this money with one single company. We're gonna find out what company that is later on in this video. So without further ado, let's get into the video. The first common mistake I see beginners making in the stock market is actually getting started. You need to start, and you need to start early. Stop procrastinating, get your feet wet today, get down in the trenches and start investing. Did you know that the stock market is known to average 7 to 10% returns annually? And this is compounding. This means that $1,000 put in the market today will be worth over $20,000 40 years from now. This is without you putting any more money into the market other than the $1,000 you put initially. On the other side of things, $1,000 put in the bank today would only be worth $500 in 40 years from now. This is because you've lost 50% of your value due to inflation. To me, it's like swimming against the current in an ocean, or it's like trying to climb upwards on a downward moving escalator. In the stock market, you need to let the power of compounding interest work for you rather than against you. Einstein is once quoted to have said, Einstein, the smartest man who ever lived, said, "Compounding interest is the 8th wonder of the world. He who understands it earns it, but he who doesn't pays it." Also, there's something called the 70-20-10 rule. This means that to master any field you put your feet in, 10% of your knowledge comes from taking lectures and classwork. 20% of your knowledge comes from working with professors and fellow students. But 70, the large majority of your knowledge comes from actually doing whatever it is you're learning. The same goes for investing. You learn 70% by actually investing, not just reading investing books. In my case, I kind of started investing late. I started at the age of 26, but at least I started, and I intend on investing for as long as I possibly can. There's a quote I really like, and it goes like this: "The best time to plant a tree is always 20 years ago, but the second best time to plant that same tree is right now." So go ahead and plant your investing tree right now. The second and most common beginner mistakes I see people making in the stock market is investing what I like to call important money. This is pretty much money you cannot afford to lose. This is money for your necessities such as food, shelter, clothing, rent, and bills. I think you need to take care of all your necessarily high debts before you start investing in the stock market. This debt will include credit card debts, which is about a 25% interest rate. Could include your student loans or just whatever debts you think are necessarily high. A good rule of thumb I like to go by is, since the stock market is known to average a 7 to 10% annual returns, if your debt is outside of this 7 to 10% range, you need to prioritize this debt over investing in the stock market. You should always have emergency cash saved up and put to the side. You never know when life is going to throw you a curveball, and trust me, life will throw you a curveball. For me, I believe a good amount to have saved up for the emergency is whatever your monthly living expenses is, calculated for a 2 to 6 month period. For me, I do have a 6-month emergency saving on the side. Initially, when I started investing, I was careful at first, but I made a mistake as time went on. I ended up jumping in with both feet and putting all my money in the stock market. I ended up running into huge car troubles, and it was a problem trying to get this fixed. So don't make the mistake I did. The third most common mistake I see beginners making in the stock market is not having a strategy. You need to always have a game plan, and this game plan needs to make sense to you. There's a saying that people never plan to fail, they just fail to plan. This is what it's like starting investing without having a game plan. You are pretty much planning to fail. Regardless of if you're a day trader, swing trader, or long-term investor, you need to stick to your strategy. It's okay for your strategy to evolve with time, because as you go into the stock market, you're going to become smarter, you're going to gain more knowledge, and you can change your strategy based on the knowledge you've gotten. Currently in that situation, we currently have 2 accounts. One is a day trading account, the other is a long-term investing account. Long-term, I mean 5 to 10 years, possibly a lifetime. And I know most people say day trading doesn't work, but right now the day trading account is outperforming our long-term investing account. Our long-term investing account, we started with about $46,000. Again, we put the money in slowly as time went on, but right now we're putting about $46,000. We're up a profit about 6.5%, which is a exact dollar amount of $3,000. Our day trading account, on the other hand, we started with $63,000. We're up 17.5%, which is about $11,000. We had a rough week last week. We ended up losing about $2,000 by a move we made in Facebook, which cost us a whole bunch of money, all because they were being investigated. Not just Facebook, the whole big tech were being investigated for the antitrust issues. But right now it's over and they're back to normal. Discipline is key when it comes to the stock market. You never have to win 100% of the trades or moves you make in the stock market, but 60% is good enough. 60% you're gonna make a huge amount of returns in the stock market. Also, you'll never buy at the bottom and sell at the top. So there's no point trying to time the market unless you're Jesus Christ or you can see the future. So in a nutshell, just stick to your strategy and trust your process. It is gonna work. The fourth mistake I see beginners making in the stock market is buying stocks blindly. You should never ever buy stocks blindly. You should always have a wish list or a watch list, and which is pretty much the same thing, by the way. You need to know when to step in and when to step out of positions in the stock market. You need to be like Kenny Rogers or Johnny Cash in their song The Gambler. You need to know when to hold on, when to fold on, when to walk away, and when to run. The secret to surviving long term in the stock market is always knowing what to throw away and what to keep as far as stock goes. Just in case you didn't know, they call me Black Country. I've actually lived in Tennessee for about 7 years, and right now I'm in Indiana for about almost 4 years now, so I've lived in the South for about 10 years now. I'm a black neck, redneck, so keep that in mind. Back to the video. If your strategy is day trading, you need to have done your technical analysis ahead of time. You need to know when to go in and when to go out. You need to also take advantage of the stop loss features / limit sell. I know most brokerages provide this. I'm sure 100% Robinhood does provide this, so use Robinhood whenever you can. Also, if you're a long-term investor, you need to have done your research ahead of time and focus on company fundamentals. Use the 4M strategy, which is a strategy I use and a lot of long-term investors use. Link to description of my video explaining what the 4M strategy is and how to use it is below, so go ahead and check it out right now. Also, when it comes to investing, follow your heart. Invest in companies you actually use. Right now, I have Under Armour on my wish list, which is a stock I'm going to buy as soon as they get to a price I want to buy them at. Obviously, I wear Under Armour clothes. The same thing with Coca-Cola. I drink Diet Coke a lot. I have about $10,000 in Coca-Cola right now. Also, ignore the noise from media like CNBC and Bloomberg. They're always crying, the sky is falling, the sky is falling. And that's the thing about people who cry wolf. One day they are gonna be right. So just ignore them and just follow your heart. Like I said, ignore the noise that comes from your family members and friends telling you, hey, invest in this deal, invest in that, invest in that. No, always do your research first. It's your money you're gonna lose or make whenever you make a good or bad deal in the stock market. It's all your money. The fifth and the last most common mistakes I see beginners making in the stock market is getting emotionally affected by short-term successes or failure. There's always a lesson to learn in every short-term success or failure in the stock market. You need to learn that lesson and keep it moving. Treat your successes and failures the same. Don't let it phase you. Learn whatever it's trying to teach you and keep going in the stock market. Don't give up all because you made a huge failure, lost a bunch of money when starting. Learn your lesson and stick with it long term. It is gonna pay off, I promise. Understand that everything good in life takes time, especially in the stock market. Patience, practice, and persistence, that's the name of the game. There's really no such thing as a quick money in the stock market. So you need to stop chasing that one deal that's gonna change your life and multiply your money by 10. You're probably not gonna find it. It is possible, but it's highly unlikely. So just stick to your game plan and execute it. Aristotle once said, you are what you repeatedly do. So excellence ought to be a habit, not a singular act. The stock market is a marathon, not a sprint. Stick to the marathon, stick to your game plan, and you are gonna win. It's a lifestyle and not a singular act. Consistency is the answer. Don't give in to fear and greed. These are the two strongest emotions that control the stock market. When people get greedy, they start buying in and they push up the price of the stock market. When people get scared, they start selling off and they push down the price of the stock market. Just stay on your game plan, stay on your grind, and you are gonna succeed. That's it for the video, guys. I ended up losing $20,000 in May, the first week of May, because initially when I first started, my portfolio was really diverse. But I thought I could make quick money by putting all my money into a company called Hertz. For those of us who might not know, this company is a car rental company that's currently going through bankruptcy. But anyways, when I sold off all my stocks, putting all my money in Hertz, they ended up filing for bankruptcy that same week. the value of my stock dropped by half and I lost $20,000 of my money. Although this was sad at the time, but I like to see it now looking back as me paying my dues. I have paid my dues in life. People pay a bunch of tuition, thousands of dollars to go to business school. I didn't go to business school, but I have paid my what I call the tuition of life. This kind of made me realize that ignorance is expensive. There's nothing more expensive than being ignorant. Education is cheap once you compare it to being ignorant. So educate yourself today and keep investing, guys. I'll see you guys in the next video. Thank you.